Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at some financial results from some of the major financial services related companies groups coming out of Jamaica. We're talking, of course, about JMMB Group Limited as well as NCB Financial Group. Now, both groups would have reported fairly contrasting earnings results for their respective reporting periods. NCB, in the case of NCB, for their first fiscal quarter of 2025, and in the case of JMMB Group Limited or JMMBGL for their 9-month period ended, or 9-month fiscal 2025 period. Let's take a look at how both groups would have performed and what investors might expect in the coming months ahead. Turning firstly to NCB Financial Group Limited, well, that grouping would have reported an earnings per share figure of the TT dollar equivalent of 4.8 cents TT per share, which was a whopping 109% increase from that 2.3 TT cents equivalent in the first quarter of 2024, that is the prior comparable period. Driving this performance was a very creditable improvement in its net result from banking and investment activities, which were up 8.8% from 1.35 billion TT equivalent to 1.478 billion TT equivalent, with overall net operating income up 12.5% to that $1.5 billion marker. Ultimately, profit attributable to equity holders increased 114% from 53 million to just over 114 million TT dollar equivalent in that first quarter of 2025. So, of course, NCB appearing to move in fairly positive direction in that first quarter of 2025. Now, again, as mentioned, there was that 8.8% odd improvement in net revenues from banking and investment activities in blue, from 1.359 billion to 1.478 billion. Net revenues from insurance activities, and again, that's net of insurance-related expenses, increasing almost or more than fivefold from 4 million TT equivalent to 55 odd million TT equivalent. Of course, with changes in accounting standards for insurance contracts, not really an apples for apples comparison in the prior comparable periods, but we see a positive trend in that first quarter to 2024 to first quarter 2025 movement for those net revenues from insurance activities. In terms of operating profit by activity for NCBFG, well, we can see that life health insurance and pension, or LHP, would have improved roughly 20% from 270 million in that first quarter of 2024 to 347 million in 2025. Among the other notable movers, more than fivefold improvement in wealth asset management and investment banking from 8 million TT equivalent to 57 million, roughly an 18% increase in general insurance operating profit from 81 to 96 million, and a 39% improvement in treasury and correspondent banking from 122 to 138 million. So most of the operating segments of NCB did record positive movement in terms of their profitability, with the exception of consumer and SME banking, which moved from a profit of 7 million to a loss of $10 million, operating loss rather, of $10 million in that first quarter of 2025. From a valuation perspective, NCB's book value, one of the less common metrics in terms of evaluating companies, would have improved or continuously improved from that first quarter of 2023 from $2.31 to its current level of $2.93 at the end of the first quarter of 2025. That's December 2024, fiscal 2025 rather. However, there hasn't been that commensurate movement in its share price, and that has resulted in its price to book ratio going down to just about 0.8 times, which does represent fairly attractive relative value when compared to the rest of the sector. So at a price of $2.39, NCB is trading at a price to earnings ratio of 8 times below the banking sector of 9.9 times, in fact, and offers investors a dividend yield of 3.6%, which is a little bit below, well below the banking sector average of 4.8%. So with that higher or improved banking and investment results, as well as improved insurance services results, and those attractive price to book multiples, Bourse is maintaining a market weight rating on NCB with a positive outlook at this particular point in time. Turning to JMMB Group Limited, well, the group would have reported for their 9-month period ended 2025 an earnings per share figure of 3.6 cents TT equivalent, which was a considerable decrease from the 36.7 TT cents equivalent reported in that prior comparable period of 2024, representing a 90% odd decrease. Operating revenues were lower by 4%, declining from 812 to 780 million TT equivalent, with profit attributable to equity holders ultimately moving down 90% from 718 million TT equivalent to just about 70 million TT equivalent. When we take a look at what would have been attributable to some of these significant movements, well, there was a roughly 90% decrease in share of profits from its associate, and that majority would have been, majorly would have been from Sagicor. It's 24% stake in Sagicor, falling from 699 million to just about 70.9 million TT equivalent, as well as a fairly significant decline in operating profits from 104 million TT equivalent to just about 16.3 million, representing an 84 to 85% odd decline period over comparable period. Now, in terms of JMMB's operating efficiency, we can see that that has also been deteriorating, moving from about 60% in that 9-month period of 2022 to about 97.9% in that 9-month period of 2025. A lower operating efficiency percentage is always considered better. So we're hoping that JMMB does, in fact, or is in fact able to turn around that operating efficiency metric, which would lead ultimately to better operating profits from its operating subsidiaries. So at a price of $1.08, JMMB is trading at a dividend yield of 2%, which is below the sector average of 3.9% and does have a negative trailing price earnings ratio compared to the sector average of 18.3 times. So with that increased net interest income, but overall lower operating revenue, associated volatility or volatility of its associate share of profits, and fairly modest dividend yield, Bourse is maintaining its market weight rating on JMMB Group Limited for the time being, with a watch in terms of the outlook for the stock at this particular point in time. But that's it for this week's edition. For more information, you can give us a call at 226-8773, email us at info@boursefinancial.com, and check out our website where all of our research is absolutely free at bourseinvestment.com. So until next time, stay safe, happy investing, and we'll see you again on the Bourse Report.